We got some action in the markets right now as we speak. This is an urgent video. We got some volatility. We got the traditional markets opening up, and we're seeing Bitcoin below 80K right now. So we need to dive into the charts on a macro time frame, look at the weekly candle closes here, and kind of see what's in store for tomorrow. You see on the chords and the boards and the streets and the tweets that there could be a potential Black Monday type of scenario tomorrow. So we're going to go into that. Are we just seeing a little panic on the open here on the weekly candle close, and we're going to see a strong Uno card reversal tomorrow? Or is this a legit concern right now? Do we need to, prepare for a COVID type drop in the markets tomorrow? So we're going to go over that. So let's get into it right now. On the left side of the screen, we got the bond yields, which isn't really opened up right now, but as you can see, we saw a mean drop and then a buyback on Friday. We're not going to go into that. We'll take a look at the dollar. Same thing there. We saw a mean drop out of the dollar and a strong buyback on Friday. Monday, we just opened up. I think there is a gap if we take a look at it, it looks like we already filled anyways. So let's actually just go to the US Russell 2000 all the way on the right side, and then we'll go to the US NAS 100, and then we'll get into the macro charts on crypto. So let's take a look. Let's go to a 10-day chart on the US Russell 2000. Came smack dab down to that 1800, and then we just opened up, I believe, at 1735. So now, so we're continuing this downtrend here at the moment. We do have a gap. If we look on the 12-hour chart, we just opened up at 1,728. We do have a gap at like 1,780, and we have prepared to buy soons on a 12-hour chart. So in the medium short term, until we see that 12-hour buy now, we can't see any relief. We got to go with the trend here, and it's still to the downside. So if we take a look at a 1-day chart here, we did reach our 4236 breakdown extension of the green here, but we do have further downside here. That brings us to 1,660. If we take a look now on the weekly chart and then change the fib to long term, let's see what it's showing us. So now we have weekly prepare to buy soons. We've only seen that like a couple of times in the past few years. As you can see, we saw it in the 2019 drop, 2020 drop, bear market of 2022, 2023, late 2023, right before we had this move to the upside. Now we're seeing it now. We take a look at the momentum here, just blood red, and we're below that zero line on the TSI. But it does look like we're in this capitulation type of candle right now for this week. So this could be a brutal week, but what comes after could be, the dust settling, and then us, we see a change in policy that, reverses this thing around. But let's look at the macro fib to see, are we running into any important macro levels here? And let me put the snakes on. Okay, so we're in the beast. We're in the beast right now, and we have that. We have more downside that could bring us to around now the lows that we found in 2022, 2023, which would be around like 1,624 for the US Russell 2000, which is about another 8% move down to bring us there. So if we were to go 8% down, like 6% down, which would bring us to those lows. If we were to see like a bad scenario to bring us down to that 1,618, which would bring us to, back to COVID type levels. If I were to take this low from the COVID crash to the high that we had set recently, that would bring us down to around 1,200-ish to, basically this zone right here. If we were to see like another type of crash like COVID were to go. So either we hold the line where we're at now, basically right here, we could go a little bit lower it's basically we hold the line here right now, a tiny bit lower to 1,600, and if we just breach there and we still have that heavy momentum, then it's just going to be, a quick capitulation down, just a snap down. And then at that point, I would expect for us to hold the line at that point if we're going to see any type of saving of the markets here. That's for the US Russell 2000. If we go to the US NAS 100, we are basically, this is where we're kind of targeting to go to. The magnet was going to bring us to this sandwich of important levels, this macro 786, the micro medium breakdown 4236 extension, and the top of the belly of the beast, and the weekly 200 moving average there as well too, where we found our support in the bear market of 2022, and we found support there on the COVID crash as well too. You can see right there the belly of the beast, the 200 moving average on the weekly chart for the COVID crash as well. We do And then we saw that in the bear market as well too. At that level, we saw the bounce. And now we're seeing a weekly prepare to buy soon that have flashed. And we're basically right at that sandwich of important breakdown extensions and macro 786, right close to that 200 weekly moving average and the belly of the beast. So if anything, maybe we see a bit more blood down, another 5-6%, maybe to start off the week, but maybe by the end of the week, we see a strong reversal. I'm going to bring us back up due to maybe like a pullback on some of the tariffs or this, that, and the other. I'm not going to speculate what it is, but we are seeing we're coming down to a very important level, and we do have gaps up here that need to be filled. And usually Sunday we see that blood, and then that could lead into Monday morning, and then we could see that reversal. We do have we can't get a break here. Some big macro data coming out. Let's see when that is coming out. I'm pretty sure, yeah, we have another week of macro data. So on April 9th, so in 3 days, so that I think that's Wednesday, we have FOMC minutes. Then we have on April 10th, Thursday, inflation, core inflation. Yeah. So a lot of inflation data. And then PPI on Friday and the consumer sentiment as well. So yeah, man, until it looks like by the end of this week, the dust should be settled across the board as far as all this macro data, all this tariff stuff, because I believe that a lot of the implementation of it goes in on April 10th as well too. So it's going to be a hella volatile week. So survive, and then it will be time to thrive. And buy the dip if you have the extra cash to do so. If not, maybe you just gotta walk away and come back next week. But ultimately, we know with these cryptos the future of it, and we know how fast things can reverse. So it's just a matter of sticking through. But yeah, so where we're at. So that was US Russell 2000, US Nasdaq 100. If we go down to like a daily chart to see kind of some medium time frames there, prepare to buy soon on the daily. Yeah, we need to just see some of those, the 1 day buy now TAR come in, and then we'll know that the dust is settled momentarily. Looking at Bitcoin here, if we go to the weekly chart, it's going to probably be a brutal weekly candle close here. But hey, ultimately, we're still above this 1 week 50 moving average. We are closing below the 786 at the moment at 79,000, but there is going to be a gap to the upside for Bitcoin, because if we look at the Bitcoin futures chart, you can see here that it already opened. So if we take a look, yeah, see how we have a gap here now at 84. Basically, let me go to a 12-hour chart. There is a gap around like 82,000. 82,000, we have a gap. Oh, no, actually 84K. We have a gap all the way up to 84,000. Prices are at sub 78K. We're talking about a gap that's about 10% to the upside here. So like I said, this could just be, the open of the markets being spooked, and then ultimately we see a strong reversal by the end of this week with a strong, that's what we need to see at the very least. But yeah, so we do have a gap to the upside that's all the way up until 84K. Let's go back to the regular Bitcoin chart, look at the weekly candle close here, and in 1 hour from now, less than an hour, we're going to see that candle close. We have a beat red candle with a long wick to the upside. Likely we'll see this candle probably close around here. We'll probably open up the new weekly candle going down probably to 76,000, maybe even tap 75K. Could go even a little bit lower, 73.5, touch these highs from back here. And then by the end of the weekly candle close of next week's candle, so in 7 days from now, see a long wick to the downside and then close back up around this level. That's what we need to see to save this. So yeah, it does not look good. This does not look good, but it's likely, like, since we're so close to the weekly candle right now, we're going to see continued downside momentum heading into tomorrow. Maybe we can find a strong bounce early in the week off this 50-week moving average to then ultimately end the weekly candle for this coming candle. That's so in 7 days from now, back at least above 80K. That's what we need to see. And if we can close it above 89K, that's when we can send it up to the moon and test 100K again. But until then, there's a lot of pressure right now bringing us down. So that's what I'm seeing there on the weekly. If we take a look at 3-day charts, some medium time frames, we are seeing a beat red bar coming out on the MACD, a 3-day stock RSI starting to roll over at that 50 line. We really needed to decisively break up above it. But as you can see here, like, this was our bottom back. And say if we're comparing it to the past August of last year, we had our capitulation with that wickening in August. We did, we popped up. It looked like we were ready to go. And then we ultimately did roll back down and test these levels again. So this could be a similar case here. It's scary right now, a lot of things going on, but ultimately we could be at the point where it's your last chance, your second chance, before ultimately heading into our blow off top type of thing. So let's look at the 2-day chart. 2-day chart where we found support on our summer correction of last year is just a hair below us at like 75.5K. At 75.5K, that's where it's at. If we take a look at this whole bull run, this whole entire bull run since 2023, we have held above those moving averages. We haven't closed bodies below there. So if we close a 2-day candle body close below that 200 moving average, we got to reconsider. And keep in mind, remember the kiss of death signal that I had mentioned on April 1st, the total chart on the week, on the monthly, with one of Stargate's macro charts that we look at to know when the bull market tops in or not. It's flashing still. So we need to see by the end of this month that turnaround. We need to see that turnaround and vanish. So let's go to, well, another thing I want to see on this is if we go to the bonus indicator and we throw on the super trend. I'm going to hide all these other things and we're going to take a look at this and where we're at right now. This is another thing, like the super trend, every time we're in a bull market, we have the blue below us. We flip into a bear market, we have the red come in, right? Right now we're still blue, but we're below this level. We're below the level. But we did that same thing back in August of last year. But ultimately we saw the blue stay in. We didn't close above there. It was just a wick. So we need to see where we're at right now for the total crypto market cap. Very important macro levels where we're at across the board for a lot of these macro driving charts that we look at here to see the health of the bull run. So that's that. That is that. If we take a look at the pump dump chart for others, we're pushing up now. We're pushing up. If we take a look though, right, we have this 786, the macro 786 right here from the high all the way back at the bear market bottom of 2022, 2023, where altcoins were at their lowest point. We have the high there to the lowest point here, which was the highest point altcoins were at in March of 2024. We have the 786 right here and we're heading up to it. So it looks like we're going to keep continuing going down here until we tap that there, which is not too far away. We're talking about, like, if we keep heading up in this chart, if we head up in this chart, that means altcoins other chart is going down. So we're talking about another 7.5%, another 7.5%. And then at that point, likely we can see a reversal. But now let's match that up with others. So let's take a look. Okay, so now we're on the other chart. Below, the other chart is below. We have the pump dump chart above. If we're talking about another 7%, let's say we go another 7% here, that brings us to that breakdown 1618 extension of this red micro fib. And then if we take kind of even a trend line here, I mean, where we're even at now, we could see us hold the line, because let me push this up. We have the lows from February, the first wickening in February, to then March, where we had Bitcoin first kind of looked like it was going to crash below 70K type of thing. And we're at it right now. As far as this is the other chart. Let me go to like a 1 day so you can see it better. And we have a 1 day prepare to buy soon flashing on this current candle as we speak. Last time we seen that signal was back in September. So we're at an important level as far as the trend line goes for connecting these lows. February 3rd, where we saw the wickening, that's when it started. And then March 11th, we touched here, and we're at there right now. We're at there right now. And we're talking about, we're literally at, for the other chart, the same point where we're at back November 4th. I think the day before the election. So we're right back where we're at right when the election was happening. So this was legit a full round trip, and not the type of round trips to Europe. Not that type of round trip. A full legit run up, exciting times, right back down to where it was at about what? 6 months ago? 6 months. So this is could be considered as a second chance. It could be considered as a second chance if we start to see some of these, the macro charts see a big reversal here. This is a second chance in my opinion. So let's take a look at the 1 week chart, and yeah, we beat red still. So yeah, it's going to take a lot to turn this around. We have the macro charts. Momentum is just dead. So we need to go down to lower time frames, like medium time frames, 3 day, 2 day, 1 day, start to see those turn around, which they started to, a little bit. 3 days started to come up. We got super close to the MACD starting to flip green, but then ultimately we curl back. It doesn't usually just since those macro charts are U-turning or have flipped like very negative and bearish, the medium charts, it's not going to just go like that. It's going to take a lot to do it. We could see it like that. And then ultimately, that's how it's going to go. It's just not going to be like a thing where we just reverse and go like that. So it's similar to back in summer, where you try it once, twice, and then ultimately you flip the trend in the macro. So that's where we're at. It's basically where we're at right now. But yeah, so like I said, with the trend line where we're at, key level, if we were to go any lower, so we have this where we're at right now, which is important. But now if we connect the wickening of December with the wickening of February down here, in my opinion, if we were to see another wickening, so we had one in December, brutal. February, brutal. If we see another wickening, it would be a break of this trend line where we're at right now. And we would see a big long wick, and it would probably tap this trend line. I'll call it the John Wick trend line, December, February, and then ultimately April. And it's kind of coinciding with the August wickening as well too. We put a horizontal line at that August wickening, and let me hide the belly of the beast real quick. So right there, if we were to drop straight down to this line, it's right at the same level of the August wickening. So that would be 151 billion for the others market cap, which would be about a 15-17% correction for altcoins if we were to do that. And if we see, it could happen. The odds, if we were to say it, are more likely at this moment given the whole environment. But right now, if we can hold these levels, then we're fine. But I'd be on guard the next 48 hours as far as this potential scenario. So I showed you the pump dump chart. And then lastly, I want to show you the alt season pulse chart. Yeah, so I'll show you the alt season pulse chart, and then we'll leave it off at that. So this is USDT dominance, USDC dominance, and Bitcoin dominance. We got rid of Ethereum dominance because Ethereum is going to trash this bull market. So basically where we're at right now, we breached past that point in February, and where we could head up to is likely these highs here back. We're talking 2019, 2020, 2021 type stuff, and we're not too far away. You had this point where every time we came up to this point and rolled over, that was the start of some big, nice altcoin runs, and especially this one, 2021, where that was the big altcoin season in the last bull market. And it's not too far away. I mean, we're at 71.63% currently. We're talking about 73.25%. We're talking about a matter of like 1.5% more. So it's, in my opinion, Max Payne last type capitulation scenario, really, squeezing people and pushing them into a state of just can't take it anymore. But this is not the time to fold. This is ultimately, in my opinion, the last gasp. The last gasp before a big reversal, U-turn, turnaround to head into that final blow off top to ultimately then at that point actually be the start of the bear market. I think this is a Max Payne type of scenario before the last big push up, and then that's going to be it. I'm going to go into XRP real quick because we do see XRP below $2 now decisively. If you go to, so we're at $1.91. It's likely we're going to see it come down, retest like $1.65, could even tap $1.50. And if we see that, we're just going to leave it off at that. But $1.65, $1.50 could even come down to $1.40 and touch these highs from over here. So as I said, and like when I was calling about that 1 week sell now signal, that's why I took profit at that level or that signal, because, you look to the past and, you see it twice. It flashes twice in the bull market tops and then it's over. So you got to take some off. Although you might not want it to be the case, it is what it is. So you just got to follow it. So that's it. So that's where we're at right now. That's what I'm seeing. I'll be in the Discord being active this week at all hours of the day, because it's time to be on top of it this week, because it's going to be super volatile. A lot of stuff happening here, a lot of changes in the market, and I want to keep you guys in the loop as much as I can, and with the changes of this market and the situation at hand here. So that's going to be it. If you're not on the Discord, link is in the bio. Come join it. I'll see you guys there and in the next video.